Hello, and welcome to OTC, the online trading course. My name is Gabriel. In this lesson, we will learn the basic terms of trading. In our previous lesson, we explained what a stock is and why shares of stocks exist in the world. In these next lessons, we aim to go far beyond what is a stock and give you a more in-depth look. So what does stock mean? Basically, it's pretty simple as we said. Shares of stock represent pieces of a business. For example, let's say you wanted to open a retail store with members of your family. You come to an understanding you need $100,000 to get the business started, so you incorporate a new company. Right away you divide the company into 1,000 similar pieces, or also known as shares of a stock. They are called this because each piece of stock is a part of the company and is entitled to a proportional share of the profit or loss. If you price each one of the new shares of stock at $100, then if you can sell all the shares to your family members, you should have the $100,000 you need, because 1,000 shares multiplied by the $100 contributed capital per share equals $100,000 cash raised for the company. Now, if you're storing, let's say, $50,000 after taxes during its first year, each share of stock would then be entitled to 1/1,000th of the profit, coming out to $50 earnings per share, or as they call it on Wall Street, EPS. If you wish, you could call for a meeting for the company's elected board of directors. This board is made up of the people the stockholders elected to watch over their interests, since they could not run the business themselves for any reason, and together decide to use the money to pay out cash dividends to the stockholders, repurchase stock for increasing the company's control over other investors, or even elect to expand the company by reinvesting in the retail store. At some point in time, if the company grew and is large enough, you could even trade on a stock exchange. That's exactly what is happening when you buy or sell shares of any company through a stockbroker. Basically, you are telling the market you are interested in buying or selling shares of a certain company, and Wall Street or a different stock exchange matches your supply or demand with someone and takes fees and commissions for doing it. Alternatively, shares of stock can be issued for the public and raise millions or billions of dollars for further expansion. That concludes this lesson. Thanks for watching.